Welcome back, traders. We'll be discussing about liquidity run in this video and how to know when price is about to move very fast by taking all the liquidity in the market. The price I'm using for this video is gold. I trade basically on gold, you understand? So let's just go into the video. And also I've been receiving some messages about some people complaining about my strategy that sometimes it doesn't work, but when it's going to work, it works perfectly. But they're still profitable using it. So I'm going to be giving answers to it right now. In this video, the reason why price doesn't respect some other block, even though they are a real order block, you understand? So you have to understand the market much better up to the point that you know when price is probably going to respect another block or not. So let's just go into the video right now. So I'm going to start from daily time frame. Then we study liquidity from daily time frame, and then we come back to a 4 hour time frame, this 4 hour time frame. So you come back to a 4 hour time frame, and then probably go down to a 1 hour time frame, and also go back to daily time frame, just to end the video. So let's go to daily time frame. So on daily time frame right here, during our last video, I discussed about that price is still on that range, and then price actually manipulating. You can see this particular high, this is the last high that price created, and also this is the last low that price created. So all this particular movement inside this particular place is just what range. So price is ranging in this particular place and then creating liquidity. I know that a lot of traders are going to end up losing a lot of money in this particular move because price is neither creating expansion or retracement. It's just consolidating inside one particular range. So this is the last high, and also this is the last low. If we check this particular place there, you can see that price end up respecting this high. So as an institutional trader, we don't trade system like this. We don't, you understand? But retail traders always trade something like this. They call it, I think, resistance. But as an institutional trader, we don't trade it because we understand the market. We know the reason why price is moving. We know the reason why price should get to a particular level and then not get to a particular level. But a retail trader doesn't understand all this. But as an institutional trader, we have full understanding about where exactly price is going to, and then the reason why price is doing what it's doing. So right here, you can see that price respecting all these high. So all these particular movements on daily time frame, this high and also this particular high is what liquidity. And then you can see that price also approaching the same level right here. So price is approaching the same level, and then probably respect it, you understand? But it's not just price is respecting it because it's a resistance line. So when you get there, we are going to discuss about this. When you get to on lower time frame, probably on 1 hour time frame, we are going to discuss about this particular area, the reason why price probably going to respect this particular place and then come down a little bit, not just respecting it, but just use it to push back a little bit before breaking it. So that is just for that. And then if you check this low parts, this particular place, so you can see that price also is creating liquidity here. So price tap into this particular level 2 times. So price is creating liquidity. As an institutional trader, we have to spot out all this particular level in the market. So we should understand where exactly we are going to next. So what I'm just expecting, price will probably take out all this high liquidity, all the liquidity resting above here. So once price end up taking out all this liquidity, and then price can probably come all the way down to take out all this liquidity here. So what I mean, price going up like this, tap out all this liquidity. There is a strong order block inside this particular order block. I discussed about this during our last video, you can go and check it out. So price probably respects an order block in this particular place and then come all the way down to break out all this liquidity, and also to form a change of character, not a break or structure. So once price break out this particular low, it does not mean that price is going on a bearish direction. It's not a break or structure. It's just a change of character. And then I mentioned something in this particular area on weekly time frame. This is where price is probably going to come into. Then once price gets into this particular area here, and then price will reverse back. This particular area, let's just use it like this, and then price will probably reverse back and then start going on a bullish direction. So this is what I'm just expecting on daily time frame. So let's just go down to 4 hour time frame and delete all this. Okay, let's go to 4 hour time frame. So on 4 hour time frame, you have to understand the market also very well. You have to understand when market is actually creating what liquidity. So you should know how to approach the market. So okay, let me link this line. So right here, you can see that price actually is creating liquidity here. Can you see this high? You have to spot out all these high in the market. You can see this high price back to this particular area and then respect it, and also use to come down, and then price approach it the third time, and then price is just like to come down a little bit before price end up breaking it. So always know that whenever price wants like to take liquidity, price always move very fast, just like to take out all this particular liquidity resting above this particular area. So as an institutional trader, when we see this in the markets, you just find a way to enter into what a bullish direction, just like to take out all this particular liquidity, because you understand this is where institutional traders are going to next. So this is where banks are going to just like to take out retail traders out of the market. So if you study this particular area on 4 hour time frame, also can you see all this area, and then this particular low, all these lows there. So you can see that price is respecting all these particulars high here. Can you see? So actually I caught this particular bearish moment you are seeing here. I use I think 1 minute time frame or 3 minutes time frame. It ended up giving like I think 1:24, but this one ended up giving like 1:13. I could remember, because I make use of this particular 4 hour order block. It ended up breaking 2 lows based on my strategy. There's the first low here, and also there is the second low. So this order block here is what a real order block, but I'm not discussing about street order block in this video. I'm just discussing about liquidity. So I call this particular bearish movement, and also this one I did the video on my YouTube page. You can just go and check it out. And also this particular moment, also I call this particular moment, but it doesn't get to maintain profit, because my take profit was around this particular place. So I end up closing the market I think around this particular place, just like closing 1/3 of the profit I've made before. So price started going what's on a bullish direction. So I think I still have all the screenshots about this particular move. I'll just check it out and then I'll upload it as a short, you understand. So I have the pictures, so but I'm not discussing about that right now. I'm just discussing about liquidity. So you can see the price was respecting all this particular area. This is the first time, second time, and then third time. You should be prepared for what a bullish direction, just like to take out all this liquidity. So once price end up taking out all this liquidity, where's the next liquidity for price to take? The downside. The downside. Even though if you share this particular order block is what a real order block. This particular order block here, it's a real order block, because this particular moment end up breaking this high. This is the first high here, and also this is the second high. So this particular moment end up breaking like 2 high, let me delete this. So you should understand that this particular order block is not going to like to hold. Price not going to respect this particular order block, even though it's a real order block, because the moment end up breaking 2 high, broke this high and also this high. I didn't calculate this one too, because this high is still what under range. The reason why this high is under range, because the low does not go below this previous low. So this high is still under range. This is the 2 high that price end up breaking. But this order block is not going to hold just because of the liquidity resting below this particular area. So the best way for you to find entry inside this particular bearish trade is just like you going down to like a lower time frame to find a perfect entry, just like a brick construction or lower time frame to enter into the market. Because this particular moment that occurs just like to take out liquidity in the market. I mean all this liquidity here. So price went up just like to take all this liquidity. So once price is done about that, where's the next liquidity for price to take? This downside. So you're not allowed to use any order block, even though it's a real order block in this particular area. So this is where I see that a lot of traders are making the mistake, even though they're trading my strategy, and then this particular order block, actually it's what a real order block, but price not respected just because of liquidity resting below it. So that is just for that. So let me delete this, and then so let me show you another one. So if you share this particular place here, price was respecting this high and also this particular high. So price respect this I think 3 times. Also I don't know how to draw a resistance line, so I'm not a retail trader. Price respect this particular high 3 times. So price end up taking out all the liquidity at once, and then if you share below it also this particular low here, can you see? Okay, I think something like this. Okay, all right. Anyhow, retail trader just draw these lines anyhow. They can draw it like this. Okay, I think it's like this. Okay, so right, so you can see the price was respecting this particular low and also this low and also this particular low, but price come all the way down just like to take out all this particular low as liquidity. So price respected the first time, second time, the third time, the worst next just like to take out the liquidity. You understand? So this just like to take out liquidity. Even though you can have what a strong order block in this particular place, you are not permitted to use it, because price is what opting for liquidity in this particular area. So that is just for that. And then So let's just go down to like 1 hour time frame. Let me delete all this now because it's too much. Then I discussed something during my last video on what I'm expecting to happen on 1 hour time frame. So I think that is what is happening right now. So I'm going to like to show you guys something. So let's just go down to like a 1 hour time frame now. So a 1 hour time frame also, you can see that price is creating liquidity. Good actually like creating liquidity when it's on that range, just like to trap out traders, you understand? So you can see that price respect this level the first time, second time, and third time. So the fourth time price end up breaking it, and also this particular low also. Can you see it in? So during my last video I said I'm expecting price to first take out this particular high, to go above this particular high here to take out the liquidity. So once price is done, price can probably come all the way down, probably respect this particular high here. So I said something about this on the daily time frame, but we are still going to go back to like daily time frame and then probably come all the way down, so just like to take out all this particular liquidity. Understand? So price end up taking out this up liquidity. Where's the next liquidity for price to take? Downside. The downside. So what I'm expecting before is just like price to first take out this particular liquidity. So once price end up taking out this liquidity, create another liquidity below here. There's the first one, there's the second one, and then create another third one here, and then probably go up. So I think we have a 4 hour time frame order block here. You can just use the 4 hour time frame, and then probably price to go up like this from here, and then probably take out all this daily time frame high, all this daily time frame liquidity. So price create the first one, the second one, the third one, then after the third one, price always works out for the liquidity. Then this downside also, the first one, the second one, and then the third one. So I'm expecting price to come all the way down after getting to this particular area. Then once price gets to this particular area, price will take out all this particular high, all this high, and then probably get into what order block. I'll discuss about this particular order block. So let's just go back to like a daily time frame. Let me show you. So this is daily time frame. So once price end up getting to this particular order block here, so what I'm expecting just like price to respect this particular order block and they use it to come all the way down, just like to take out this particular low. So this is what I'm expecting to happen in the market. So let's just go down to like a 1 hour time frame. So a 1 hour time frame right now, you can see that price take out all this particular liquidity. So you can be asking me that how are we going to like to enter into the trade where we know that price is about to like to take out liquidity in the market. So it's very simple, guys. It's very simple. The first thing for you to just understand just like where exactly price is going to, which liquidity is price going to take first. So once you're able to like to find out the first liquidity that price is going to like to take out, then you know how to like to enter into the trade. During my last video before all this movement play out, I've mentioned you that I'm expecting price to take out this particular upside liquidity. You can just go and check out the video because I think price was around this particular place around there. So I'm expecting price to take out this particular up liquidity. So once price end up taking it out, where's the next liquidity for price to take? This particular low. Even though this particular order block here can be a real order block, don't mind that particular order block, you understand? So then after price end up taking out this particular low, probably come all the way back to this particular 4 hour order block or 1 hour order block, just like to respect it and then start going what on a bullish direction. So you can be asking that now that you know that price is going to like to take out liquidity and all those stuff, how are we going to like to enter into the trade as an institutional trader? It's very simple, guys. It's very simple. So the first thing for you to do when you want to like to enter into the trade with a bank just like to take out liquidity is for you to know the side of the liquidity that market is probably going to take first. So during my last video I said price probably going to like to take out all this side liquidity, the upside, then before taking out the downside. So once you understand that, then you find a way to enter into the market just like to buy the market, you understand? Then it's very simple. These are 1 hour time frame. You can see that price end up breaking this particular high here. So I teach actually a very simple strategy. Any single time you see price end up breaking into high, so price broke to high here, so you're going to like to make use of the order block that is responsible for it. So this order block here is what a real order block. So this order block is what a real order block. So this 1 hour time frame, you can just go down to like 15 minutes time frame. So on 15 minutes time frame, you can see this particular order block is the one responding for this particular move that broke this high and also this particular high. So you can just make use of this particular 15 minutes order block and then just like to increase your risk to reward ratio. And also if you want to increase your risk to reward ratio, also you can also go down to another lower time frame, just like 5 minutes time frame, 3 minutes time frame, or 1 minute time frame. I've already created a video about that, so you can just go and watch the video. So right here you can just enter into your trade and then take out all this upside liquidity. So once price end up taking it out, and then you also like to wait for price to break structure. Also if you want to enter into like the sell, if you want to like to sell the market, so you have to like to wait for price to break structure. So once price end up breaking structure, just find out the reorder block. I did a video about how to find out reorder block, so you can just watch the video. So find out the reorder block that end up breaking the structure and other stuff, then enter into what is sell the market using it. So I'm going to like to be selling this particular trade, so I'm going to wait for price to actually give me entry. So I'm going to wait for my setup to play out. Once my setup play out, I'm going to like to sell the market. So that's just for that. And please, if you're new to this channel, please kindly subscribe. I really appreciate that, and then like this video. So you can also join my mentorship program. My mentorship program is on right now, so you can learn all these things, how to identify a reorder block, how to know the order block to use and the one not to use, and also how to increase your risk to reward ratio, just like making 1:10, 1:20, 1:30, and then upward, you understand. So that's what I teach here. For example, this particular trade there, if you have to like to calculate the ratio, it's 1:12. It's 1:12. So if you set what your stop loss there, and then your take profit probably is set it in. Okay, this 1:8 here, 1:7. So 1:7. But if you make use of 5 minutes order block, let me just go down to 5 minutes order block. If you make use of 5 minutes order block, you're going to see the order block here, this particular order block. So price end up taking out this particular low, and also respect this particular order block. So there's a reason why you can see that price actually tap into this particular order block here, just like taking out this particular liquidity. So we have liquidity sweep here, then after that price tap into this particular order block, and then your stop loss can just be below it here. So if you also like to check the ratio, also is going to like to increase. So this 1:27. So just imagine you risking 1% of your account into this particular trade, and then you making 27% in just one single trade, and then this next bearish movement is going to give a very big ratio, because I'm expecting price to take out all this low, and they probably come down to this particular 4-hour time frame order block. So it's going to like to be a very massive. And then tomorrow is Thursday, so you understand that rally always happen probably on Thursdays, you understand. So I'll be expecting a big rally on Thursday, just like to come down to this particular area. So that's just what I'm expecting. So you can join my mentorship and then let all these things out, like to cash in all this particular move. I'm going to leave the link in the description, so just click on the link to join my mentorship program. So you're going to learn a lot of things, and then I'm going to like to be training you personally for it, so you can join. And then if you're new to this channel, don't forget to subscribe and then like this video. See you in my next video.